Hi, I'm Vadim Poklopkin. Welcome to the chart of the day. Why the phrase "speculators are certain" should worry you. If you're paying close attention to the dates on this chart, you've already spotted that it's not from this October. It is from last October. At the bottom, this chart shows you the VIX, the stock market's so-called fear index. And in the top line, you see the net position in VIX futures held by the so-called large speculators, banks and hedge funds. What this blue line shows you, simply, is that last October, large speculators were making their biggest bet in almost a year that market volatility would remain low. Stocks were making new all-time highs at the time, volatility had been exceptionally low for weeks, and the general feeling was that the calm would only continue. Our October 8, 2018 US short-term update said, large specs often make their biggest bets near trend reversals, catching them in wrong way bets at the wrong time. What happened next? Stocks made a top that very month. Volatility shot way up, and in the S&P 500, the expected Santa Claus rally turned out to be a 20% Santa Claus sell-off. So why do I bring this up now? Well, consider this quote from our November 1st US short-term update. This week's Commitment of Traders report shows that large speculators in VIX futures are net short 187,948 contracts, a new record extreme. In other words, speculators today are not just certain that market volatility will remain low. They have never been more certain of that in the history of this indicator. Does this mean that we'll see the same volatile sell-off into the end of this year? Not necessarily. Markets rarely do the exact same thing twice. But today, just like last October, we are monitoring the stock market's elliott wave pattern, along with multiple supporting indicators. They helped us alert subscribers to an important trend change last fall, and they're sending a clear message right now as well.